Welcome to Investors Insights. Our topic today, expect the unexpected in 2026. We've got a fantastic vlog for you today that will not only address the markets and economy, how we're rolling out of 2025 into 2026 and looking down the road. We are also going to address what took place over the weekend in Latin America in relation to the United States, the oil energy industry. We've got a lot of information for you. And with that, we want to emphasize expect the unexpected. So this information, I think, will be very beneficial for you to take time to watch. That said, I came out of a very exciting portfolio strategies meeting this morning with my distinguished colleagues, Bobby Norman and Trey Booth. And they're going to share information from our meeting, pull back the curtain of things that we're looking at. Trey, I want to start off with you because you talked about the Fed and some other details that I think are very important as we move into the 2026.
Yeah, thanks, Greg. Yeah, so 2026 is definitely going to be a big year of transition. We talked about 2025 being the transition to 2026, the transition to AI, transition to hopefully productivity. Now it's really kind of the 2026 is going to be somewhat of a year of put up or shut up. It's change that there's unexpected change, but there's also change that we can expect that we're looking forward to. And one of those expected changes is the midterm election. You can see here on this chart that the second year of a presidential cycle is on average the most volatile. You can see it has the lowest lows with an average drawdown of almost 20%, but then the highest highs with the best recovery from that drawdown. And so we do expect there to be volatility. What we don't expect is it's hard to say what's going to drive it. As we saw over the weekend, the unexpected can come at you fast. And so what you need to do is just be prepared for what's unexpected and be defensive, and then be ready to move and pounce on opportunities that are created from that unexpected outcome. But we do expect a good bit of volatility driven by the midterm elections. And then another item of change that we know is going to happen is that we're going to get a new Fed chairman during this year. Someone's going to move in. We're not so sure who, but we know it's going to be somebody new. And Fed chairmen are often challenged early in their reign by the markets. The markets like to test Fed chairman. 2018, back when Jerome Powell was newly in office, the markets really tested him, pushed him with a 20% drawdown and an inflation and interest rate scare that he really actually did well on. Back in the 80s, Alan Greenspan was tested early on in his administration with a 20% drawdown of market in a couple of days. So we're expecting some volatility around that news. But the Fed chairman is coming into what should be hopefully a positive transition. We've had a problem since COVID of having too much money chasing too few goods. That causes inflation. Can we see that transition into an increase in goods production, which is caused by productivity? This chart here is produced by Strategas. It's what's called the Common Man CPI. And what it shows is on the blue line, that is the cost of goods that people need: food, energy, shelter, insurance, things that are necessary to life. The cost of those goods versus the average wages in the red line. You can see that really spiked out in 2022. And while that spread has come down slightly, it hasn't reversed. And you really need to see that reverse, where people are making more money, or wages are going up faster than cost for the average person to really get ahead in this country. Do we see that shift, transition, and flip? That would be very positive for the Fed chairman, because if it doesn't, then they're really between a rock and a hard place of a slowing economy and higher inflation. And so we really need to see that productivity shift in 2026. That line needs to cross. The Fed chairman is not going to be handed an easy bit of goods there. So something we're watching closely there. This, however, on the good side, this is coming at a time where in early April in 2026, you can see here we expect one of the largest tax refund cycles in history, a 44% increase in tax refunds over last year due to the tax bill that was passed in 2025. It's actually going to start going into effect in 2026. Expectations are between 150 to 200 billion in additional tax refunds going to the average American consumer. And if the American consumer has told us anything, one thing we can't expect is they're going to spend that money. That'll hit right into the economy. Now, what they spend it on and how it's spent or saved, again, there's two sides to every coin. Will that be inflationary, or will it be stimulative where we'll see growth? That's the unanswered question. That's what's going to be unexpected. That's what the Fed chairman is going to have to deal with. That's the midterm election going to have to deal with. Those are some of the items we're looking at very closely going into 2026.
Yes, and we're going to keep everybody updated on all these topics. I thought we did a great year in 2025, and I'm going to go to Bobby here in just a second. But Trey, thank you for looking at that. And I will also tell our viewers, Trey, hold off for just a minute. After Bobby shares his data, I'd really like for you to address what took place over the weekend in Latin America, the U.S. involvement, energy, all of that. We will address that because Bobby's information ties in directly with what you just talked about in terms of corporate profits. I thought we did an outstanding job at Five Plan Partners keeping our viewership, our clients updated on corporate earnings and profits last year, and we're going into 2026. Bobby, you did a great job this morning as we had our debate talk about that.
Yeah, obviously, as we continue to analyze the markets going into 2026, we want to continue talking about our top investment themes that we believe will be the most impactful for the markets and, more importantly, our clients' portfolios. So first, let's talk about corporate profits. Seen in this first chart, corporate profits have been a key driver in stock market performance, and we believe that will continue in 2026 as corporate America continues to look really strong with positive drivers continuing in the new year due to spending on artificial intelligence, a strong consumer, and Federal Reserve rate cuts. So we do expect corporate profits to continue to drive positive stock market growth. The second thing that we're looking at is commodity prices, such as gold, silver, copper. You can see this next chart, the price of gold and copper rallied last year, which brings into question if this type of performance can be duplicated or if the prices will trade back in 2026. So to understand gold rallying like it did last year, you have to look at history and the current economies and globalization. So gold has historically been a global liquidity reserve in the face of broad currency debasement and deglobalization, and has been a hedge for inflation pressures and a flight to safety for those kind of worried about the historically large fiscal budget deficit. But a resurgence of U.S. growth could slow the pace of upcoming rate cuts, which could put downward pressure on gold. In fact, we had a very strong GDP report for the third quarter come out at the end of the year. So we'll be following closely to see if gold and other commodities can continue to surprise to the upside. And the third investment theme is stock concentration that we addressed a lot throughout 2025, and it's something that we will continue to talk about in 2026. You can see in this next chart that the 10 largest stocks in the S&P 500 represent an astounding 41% of the S&P 500. In fact, 8 of those 10 are highly connected to artificial intelligence. So the big question for 2026 will be if corporate investment in AI can continue at the current levels of spending and if the market will broaden out some in 2026. Our call for 2026 is that the likelihood of fiscal, regulatory, and monetary stimulus occurring simultaneously in 2026, we believe that earnings growth is likely to sustain and broaden out and help the overall market, it will be healthy in the new year in 2026.
Yeah, great insight. So, and again, topics we're going to be talking about in our vlogs, on our social media, Twitter, LinkedIn, Facebook, Instagram, all these topics, we're going to continue to keep people informed as well as these discussions we're bringing to you today. So, Trey, one of the unexpected as we go into 2026 took place over the weekend. Talk to us about what's going on in Latin America.
Yeah, absolutely, Greg. Thanks. This is a lesson of never make your list on Friday for a vlog on Monday.
Well said. Yes.
Yes. I think something that wasn't on our bingo card for the weekend. There was a massive unrest in Venezuela in terms of removing Maduro from power on his way to either New York, Miami, Chicago. This is an ever-changing news story, so I want to caution our viewers. We are updating it as quickly as we can adjust to the facts that are on the ground. But something we're watching closely is the topic of heavy crude versus light crude. And this is something we talked about back in April around the restrictions on imports of Canadian oil. So for decades, the U.S. didn't produce enough oil for its consumption, and we imported heavily from Venezuela and Canada, and they produce what's called heavy crude, which is refined in a specific way, separate from the light crude that our frackers produce in the U.S. So oddly enough, we have a large amount of capacity to refine oil that isn't produced here in the U.S. And so because of that, though, that has at times driven a spread between the price of oil has come down. And we talked about this going into the holidays. Bobby and I looked at the price of gas versus the price of oil. And the price of oil has come down considerably while the price of gas has come down a little bit. I think oil is down 20 some odd percent and gas is only down 10. What's causing that spread? Refining. And if one of these silver linings potentially, if we see, depending on how this plays out in Venezuela, we see a reintroduction of that heavy crude produced in Venezuela into the U.S. market, where it's been heavily restricted because of all the geopolitical restrictions put on it. We could see that spread between oil and gas contract, and that could be a boon for U.S. consumers. And one of those things, we're looking at the common man CPI chart. One of the key drivers of that is the price of fuel on individuals. And that if that can come down, that can have a large impact across the economy in terms of cost of living versus wages. So something we're watching closely, and how that impacts specific oil companies, specific parts of the industry that have those special refineries, that have that relationship, that are already in place. It's something. It's an ever-changing story, but something we're watching closely that maybe is a little unintended consequence that people aren't talking about. But that is very not. You think oil, you think it's just black gold, as they say. But not all oil is produced the same, and not all is refined the same. It's a very complex process. I know very little about, but we've been reading about it over the weekend, trying to stay on top of things.
Yeah, and I thought your insight and the way you put all that together and summarized it was fantastic. And with that, I just want to throw a challenge out there to our viewers. I'm going to ask you to forward this to others, to your colleagues at work, to your neighbors, your friends, family. The reason I'm saying that, throughout all of 2025, I had people constantly come in here to Five Plan Partners and say to me, well, one of your clients was forwarding me information, and I was hearing things I wasn't hearing from anybody else. I want to ask you to share our information. One of the things we believe in here at Five Plan Partners is knowledge is power. It takes away fear. It takes away anxiety. And hopefully this kind of information you can use every day, and also know that we're on top of it in relation to your financial blueprint as well as your portfolio strategies. And when you share this information, just ask them, are you hearing this information from anybody else? We would appreciate feedback. It means a lot to us. We work hard on this vlog and the information, and we're going to keep you informed on all these topics. We hope you have a great week here in 2026 as we start this new year. And just know that here at Five Plan Partners, every day we are striving to make our clients' lives better, richer, fuller. Have a great week, and we look forward to sending you more information and vlogs like this one. Thanks.